Well, let's talk more about gold and silver hitting record highs. And to some extent, it appears investors are pulling out of U.S. assets. We also, of course, saw increased oil prices today due to fears over supply in the Black Sea region. We're joined by Bart Melek, Managing Director and Global Head of Commodity Strategy at TD. Thank you very much, Bart, for joining us.
Well, it's great to be here.
Gold, obviously fear propelling gold higher. We have seen weakness in the US dollar, but what is your outlook for gold right now, Bart?
Well, apparently not high enough. We were quite bullish a few months ago relative to where the price was, but today we're at 47.59 as we speak, and certainly I think it may go higher if these geopolitical tensions continue. But it's not only about the geopolitics that I think gold is reacting to. It's also looking at the potential relationship between the White House and the Federal Reserve. A few days ago, we kind of forgotten about it because there's been so much other things happening around the world. But there have been, big implications from the White House that we might get a chairman who is much more dovish than Mr. Powell currently is. We're seeing Justice Department having an investigation against a sitting Fed chair. That is getting the market to be quite worried about the independence of the institution. And given the fact that we are, in the United States in a bit of a conflict with Europe, and given that Europe and external players hold some well over $9 trillion worth of treasuries, no one really knows how this is going to go. We could see treasuries used as a weapon, and at the same time, the Federal Reserve would possibly have to act and add liquidity at a time where inflation is still problematic. We're in uncharted territory, and in this case, people are looking into gold and away from risk assets, as we're seeing based on what equity performance is doing.
Yeah, that's interesting. You mentioned U.S. Treasuries. Maybe we could put up a 5-year chart for the yield on U.S. 10-year bonds as a benchmark of sentiment about those. China is a massive holder of U.S. debt. Lots of nations are. And if Trump manages to antagonize them enough, they could start dumping U.S. debt.
Well, that could be a strategy. Of course, we have no more information than anyone else, but we could see retaliatory tariffs against the U.S. As well, and that is a real vulnerability, for the market broadly and risk assets in particular. So I'm not overly surprised here that gold is doing what it's doing in this environment. I'm surprised that things have been allowed to go so far, but that gold is reacting in this way, I don't think should be surprising. And I suspect there might be more to go.
It's tough for a strategist like you because these are unprecedented developments. Trump getting into at least a war of words with NATO allies like this. Could we get your take, Bart, on platinum? Because you've been doing quite a bit of work on that. What about platinum over the next year?
We like platinum. Today is at 24.57. Again, it's a little bit higher than we thought, just a few months ago. But then we didn't expect the events that are happening. I think there's several things we need to remember about platinum. One, it's probably going to be in a deficit again. And the idea that platinum used in auto catalysts for regular engine, ICE engines are no longer needed is done, as the Trump administration basically eliminated most of the provisions required under the Inflation Reduction Act and a lot of the environmental measures. So what are we seeing? Well, we're seeing auto catalyst demand pretty firm. We're seeing higher loadings, and the hybrids that are being favored by consumers of course, also have the same type of a loading as a standard auto as well. So the idea that platinum will be no longer needed is out, and we've seen large declines in production in South Africa, in particular, and we're seeing a deficit and a squeeze on the short end. And if that wasn't enough, there are concerns that the 232 provisions potentially, when the strategy comes out, I think in June, we could see limitations and large tariffs on it. So metal isn't moving from where it is to where it needs to be, and that's creating liquidity problems and hence a lot of stress in the markets and much higher prices. So a squeeze of sort, as we've seen in silver earlier, I think we're continuing to see some sort of a gamma squeeze as well now.
That's it. And of course, Section 232, these are the sanctions the Trump administration put on what it said was national security grounds. And they could restrict movements of it into the States. Talk to us a bit about palladium. What's the pattern you see there, Bart?
Well, palladium was one of the metals that is very, very intensively used in auto catalysts, and the story there was also even much more so than platinum, that with EVs taking over a while back, the demand for palladium isn't going to be there. Well, as I said before, as it turned out, we do need palladium, and we're going to need it more and more as hybrids really dominate and ICE vehicles, particularly in the U.S. And again, we have sanctions on Russia, which is the biggest producer of palladium as a byproduct of its nickel production out of Norilsk. So we're seeing deficits there. And again, very tight markets on the short end of the curve.
And sorry, what about, are there sanctions on Russian palladium? Can you remind me offhand? Or
I'm sorry, could you say that again?
Sorry, are there sanctions on Russian palladium? I think metal exports many of them have been just exempt from sanctions.
Well, technically, any palladium and platinum, the LBMA will not allow that were produced before the sanctions last year. Material in inventory in the LBMA system is movable, but the problem here is there is a lot of credit and reputational risk where a lot of financial institutions don't want to touch it for optics, if no other reason.
Thank you very much indeed, Bart. Really appreciate it. We covered loads of ground, as we always do with you. Bart Melek, Managing Director and Global Head of Commodity Strategy at TD Securities.